Hello, everyone. Welcome to XM Live Trading Session in the Beginner's Room. It's Candlesticks and Chart Pattern Session. My name is Junaid Vahid. I'm trader, analyst, and Forex instructor. Started trading back in 2011. I'm using fundamentals, technicals, and sentiment in my analysis. My trading style is price action swing trading. What's the difference between my analysis and the trading style is that analysis generates ideas, and I'm trading those ideas with my price action strategies. That's it. So it's different when you're analyzing markets in order to generate ideas. And then after you generate ideas, after you have some context, then you can look deep into that and find a way to trade that idea. So the strategies, trade management, risk management, it's coming with different techniques rather than pure analysis. Analysis, it's not easy. It's very tough. It's difficult. A lot of information, which is true, which is not. How do you filter out? Analysis is very important part of technical trade of trading. Doesn't matter if it's technical or fundamental, but it's very important part that clears out the context, creates the context, and then you trade. You are using your strategies to trade those analysis. How we can generate trade ideas. This is one of the favorite questions I have, and probably is the first question I ask anybody that I just get to know in trading. If I meet you somewhere and you tell me that you are a trader and we have some discussion, I will ask you, how do you generate trade ideas? And I'll be very curious for your answer because probably you are not getting these questions so much, or maybe never. And you will also, I'm using this and that. Generating trade ideas can be different. We've discussed that on a couple of sessions before, that the way it's actually two major ways you can generate a top-down approach and bottom-up approach simply. Top-down approach, you can start from highest top, which is fundamentals, going down for maybe seasonality that we had on the previous sessions, statistics, any type of fundamentals, maybe commitment of trader report can give you a context, whatever can give you context. Fundamentals, then you can go for a long-term technicals, bigger time frame analysis, some great methods of analyzing the market trends and structures like Elliott waves, Wyckoff method, Dow theory. These are amazing ways to prepare a market context, your story about it, and then if everything is aligned, you had to generate idea. If not, then you probably still don't have it. You just don't need to move to the other instruments. But if you are using fundamentals, most probably this top-down approach is gonna really clear out where you have to go and trade, which means that top-down approach is our funnel. We start from the higher time frames or bigger, most important information from top down, fundamentals, market context from some trading methods, seasonality, statistics. Maybe you have commitment of trader reports, name many more. Like I just cannot name all of them right now. So, and then you squeeze it down for a technical lower time frame daily 4-hour chart that fits the bigger picture, which is often you have probably see that you need to trade in the direction of the trend. Trend is your friend. That's a context. It's not that you, whenever you see the trend, you need to click the button, but it's a context. Oh, the trend is bullish. I've heard that I need to trade the trend, but how? Then you need to have the method of trend following, and so you can join that trend. That's it. So trend is your friend. It's among beginner traders, it's a problem, okay? Because whenever I know, because I was a beginner trader and I heard that many times, trend is your friend when they say just follow the trend. And I'm opening the trend. I don't know how to follow it, but I see that there is a trend. I'm opening it. The chart is going up. So I'm like, so I need to click the buy. That's it. Maybe if I click the buy right now because the trend is bullish, I should win because trend is my friend. If we are friends, then it will support me. Okay. And I'm clicking the button and I'm losing. So I'm like, this trend is not my friend. And I'm losing trust on this because I don't know how to follow it. So the analysis comes here, where you have this top-down approach, creating the context, you see the trend, but then you go down for a trading methods. Methods can be very different. You can change the methods all the time with the changing market conditions. Like you can have price action method. Sometimes you can have technical method. Sometimes you can use seasonality method. Sometimes you can use a pure intraday price action method. But the principles of generating trade ideas and trading success are the same. They cannot be changed. Until they change, it takes a long time. So for methods, you need to have multiple methods in order to be able to adapt the changes, the dynamic changes of the markets. So how that comes. Um, Top-down approach and bottom-up approach, I said in the beginning. Bottom-up is you are doing the opposite. You are starting from the lowest level and then going and confirming by going to the higher level. So basically, confirming the channel, the funnel. So how that works? You start with the first, just maybe um, signal based on some level. You see very strong support level. You open the chart, you see very strong support level for the instrument. And that looks so nice for buying. Like this is super strong level for buying. And in your opinion, based on your experience, knowledge, this must buy, this must jump. But you are not so sure why that happens, why the price is there, and why the price is at that support, and if it's going to go up. Let's check something that can support that level of resistance, and let's see what is the context saying that we are at support and maybe we buy it. But what are the maybe sentiment, maybe seasonality, depends on the instrument, maybe the commitment of trader reports that can give you information if big boys are buying or they are ready to buy, or there is some closing short positions before they start buy. There are always signs, signals that can give you the information, or maybe look at fundamentals. Exactly at that particular moment, the um, maybe Fed meeting is coming exactly at the support. That happens quite often. Very strong levels, strong support, and market awaits for Fed decision. And you see that at the support, it's not breaking down. It's staying at the support, ranging for sideways. And you are like, okay, how come that this price is sitting at the support, not moving, and in 2 days we have Fed? So this means that in these 2 days you don't see market volatility because markets are focusing on Fed decision. And if Fed changes something or says something that market was expecting, maybe we see the changing of the trend. If not, then we see the breakdown. So trends are levels are there to be broken or to work as one. So at that particular moment, we are looking for trade ideas. We already saw the signal or saw the potential signal or the bottoms. We just confirm by going for a bottom-up approach to confirm our thesis that price can bounce. If nothing confirms, we are just not confident to create a trading plan there. Okay, so if nothing happens, you just see it very nicely, you keep following, but no trading plan yet because nothing to confirm it. You just buy pure short-term trading technicals. This is basically fitting only in the technicals. Then you say strong support. Okay, let's at least wait for a signal and let's see the momentum kicks in our direction, because blind entry at this point without any confirmation from other uh, aspects, not good. Like it's not high probability setup. It's basically blind entry trading, and this is usually um, not what we want. Not a sniper trading, not a high probability trading. Still, you can do it as a blind entry trader. You can use just small part of the entire market analysis, but I'm focusing right now for this as a generating trade idea. You can use some fundamentals. Fundamentals, in my opinion, cannot be traded because you cannot time it. In order to trade fundamentals by themselves, you need to go for the technicals. You need to have technicals or some short-term sentiment analysis, which still you can use technicals. For trading, technicals are must. Fundamentals, not. Fundamentals can help you to be more accurate, to know your market, to know the bigger picture, to give you confidence. It is great, but pure trading fundamentals, it's not working well, in my opinion and my experience. This is actually what helps everything. Both are the way that we trade. And if you add also the sentiment analysis, the confidence levels are rising. Okay, so you can trade only technicals. I don't believe you can trade only fundamentals without chart. Okay, um, so only technicals. If you take it out here, we can also zoom in into that. You still have top-down approach. This is the funnel. Okay. Think about everything as a funnel, guys, as a marketing. Okay. Like, I don't know, maybe you are not marketing expert or so, but so let's say the funnel is like this. The first part is the big time frame trend analysis. Big time frame trend analysis. Mid time frame pattern analysis. Until then, until you come to the signal. Signal and momentum. Maybe signal is momentum is after the signal. So you have the signal, and when the momentum kicks in, you buy. So my technical funnel, 5 important steps in order to confirm my entry. It's trend analysis, chart pattern analysis, risk to reward, no signal, trading signal, risk to reward, and market momentum. If everything is answered, then I can open a trade here. Okay, buy or sell. On top of this, basically you can widen the funnel like this. Okay, you can have fundamentals, market sentiment, mid and long, short and mid-term market sentiment, liquidity, which is part of fundamental, and then you go for technicals. So that's the way basically to filter out and use top-down approach. Bottom-up approach, again, instead you basically start from here, you start from here. You have a pin bar and you say, oh, why do I have pin bar as a support? What is that signal coming from? So then you go check the bigger time frame, You see the market context on the Wyckoff theory or Elliott wave theory or Dart theory or Wolf waves or harmonic patterns, whatever you use. You check the bigger time frame, you confirm it, and then you say, let me see the fundamentals of this instrument. Let's see what's going on here. You go like this, the sector analysis, and you confirm that this signal is good. This is bottom-up approach. The previous one was top-down approach. That's how we generate trade ideas. That's why analysis is very important. Like, why I'm saying it, and you are like, how you can trade without analysis? You can trade without analysis, definitely. You can just go for a strategy that is predefined with exact entry and exit. No need to analyze. You just follow that cross, moving average cross. It's doing for you, but you have no idea what it's doing for you. You just follow some lines and that's it. You don't care if you trade head and shoulder. You don't care about market context. The only thing you care about is to see this shape that is looking like head and shoulder, and you trade it by its rules. This one, it's, in my opinion, way lower probability, but it's probably stress-free than this one. Deep analysis basically involves with your emotions, a little bit with your brain, because it gives you more scenarios. And when you have more scenarios, you are getting confused. Confusion is basically emotions, like, oh, I'm confused. Should I buy? Should I sell? One part says buy, the other sales. And so you have some, jumping in emotions and confusion, etc. You don't have any confusion here. You don't care what is happening with the market. You just go and buy, sell the pattern, head and shoulder, moving average cross, RSI 30. You have no idea why you buy it. Statistics are saying that it works and you follow it. No analysis, nothing. You just do what you're supposed to do based on the proven strategy. Okay, that's the other way. Many traders are trading this way, and when they fall in a trap of this strategy doesn't work anymore, they don't know what to do. They cannot adapt, they cannot change because they don't have anything else. They just stick to their strategy because it was working. And what happens after it stops working? They don't stop trading that. They don't know that strategy stopped working. They still trust it because it was working, but the more losses comes, the more their trust goes away, and the more confused they get, the more they don't know what to do because they didn't study anything else. They don't have this analytical way of trading. They just go and do those blind entries without understanding the market context just because of the strategy. Which one is you? Are you more analytical, preparing, looking at for bottoms to tops and trying to understand everything and increase probabilities in your trading logically with knowledge, or you just follow some mathematics or somebody's strategy that is pure strict rules based we have without market context? Like head and shoulder itself, it's a market context, but the problem with this is that you don't put it in the bigger context. If it's in the trend, in the bearish trend, in the bullish trend, why that forms? Isn't it only a sideways correction and market goes up Is it really a reversal? Do we have something to confirm